This trade I think has a lot of weight in my book just because it was one of those trades that could have continued to move in my direction, but I managed it properly so that when it did turn around to actually end up coming against me, I was able to still end profitable on this trade. And it comes after my last recap, which was on a Euro USD position. And that trade stopped me out and continued to move in the direction that I was trading. So a lot of people commented on that video and said, Austin, how did you not catch the whole move? What did we do to catch the whole move? What I always say is that we have to follow our tested rules. And this was something that I talked a lot about on the webinar. But if we're following those tested rules, some of these trades are going to pull back and stop you out in profit, and you're going to have to walk away from that and wait for the next entry. But some of them are going to stop you out before they go against you, like this trade we're going to talk about today. So in that sense, it's good to have your stop loss there. And then there will be trades that will not pull back at all, and you'll be able to take advantage of that full move. And the only way you can do that is if you have consistent rules, and you have to manage these trades the same way. So let me show you what happened in our group chat first this morning. You can see here, the date was Thursday, January 21st. I said good morning to everybody, sent a little bit of a Bitcoin analysis, and then I sent my chart of Euro AUD. And I said if the 1 minute liquid 50 can hold the sell zone, maybe you get the 15-minute downshift. Now that's some ASFX terminology that we teach in our course, but the markup that I sent them was this. You have the 15-minute of Euro AUD on the right side, and you have the 1 minute chart on the left side. We had bearish divergence present on the 1 minute with price rising and the RSI falling. That set up the potential for us to see this move lower. What I didn't like about this setup was that on the 15-minute, we had bullish divergence here from last night, and we were still basically trading within the Asian range. We had broken out just barely here, but it was very much sideways so far today. We didn't really see any extension, but I was trying to follow the overall downtrend. So here, you can see my markup of the trade from where I took my position. You can see it only fell about 1R, and then it turns around and stops me out in profit. Now, I graded this trade a C setup, and I said that in the group chat here. As this C setup developed for people that were following my idea, I wanted them to make sure that I wanted them to know that I locked my stop loss in profit as the trade reached 1R, because that's what my rules tell me to do when we have a C setup. So how do you qualify this as a C setup? You can use the 1 minute and the 15-minute, asking yourself questions within the ASFX checklist to see if it's an A, B, or C setup. This had two major things wrong with it. The liquid 50 on the 15-minute was rising, and you had, like I said, price action basically trading within the Asian range. A third thing, an important thing, is this bullish divergence. So really there were three things wrong with it, not just those two. So with those two major ones / three things wrong with it, that instantly makes it a C setup, which means that at 1R, I'm locking my stop loss no matter what. This could have kept falling, absolutely. But instead, when it breaks the 50 EMA here, it ends up coming higher all day, the rest of the day, and into the next day, it continued like another 60 pips. So it moved 120 pips in the opposite direction. And if I had stayed married to the idea that, oh, it's gonna fall, I'll short it again later today, you're just getting burned the whole way. But instead, because of our systems, we test rules to go into these systems, and this is what I teach in the course, the systems kept me profitable.